Michael Burry warning. Cathie Wood of Ark Invest releases disturbing analysis. As one of the most famous investment managers in the world, Cathie Wood is well known for betting big on a handful of stocks. Critics say she's playing with fire, but with a massive 152% return in 2020, Wood's Ark Innovation Fund has propelled her to the front page of CNBC and many other financial media outlets. It's a high-flying, high-risk, high-reward tier of investing, and it has proved to be quite successful in the last dozen quarters. Today we're going to talk all about Michael Burry's warning and Cathie Wood's disturbing analysis. So watch the video till the end, because today's video is going to be the bomb. Welcome to Michael Burry Secrets, your daily dose of Michael Burry. If you're interested in everything around Burry, this is the place for you. Subscribe if you want to stay updated with all the Michael Burry secrets, predictions, and stay one step ahead in the financial world. Watch the video till the end, and make sure to hit the like button if you want to be a millionaire within the next 3 years. Don't forget to enable all notifications to join our weekly cash giveaway pinned in the comments. Now let's get to our topic. Two of America's most respected investors, each with their own claim on the affections of cryptocurrency bulls, are locking horns over their conflicting views of the economic future. On one side is Cathie Wood, head of Ark Invest, whose Ark Innovation ETF holds bullish positions on companies like Tesla and Coinbase. On the other side is Michael Burry, whose 2007 bet against the housing market just before it triggered a financial crisis and the Great Recession has turned him into a near-mythic doomsayer. On Monday, it was reported that Burry, through his Scion Asset Management Fund, is betting against the success of Wood's Innovation ETF to the tune of 235,500 shares shorted, or about $31 million worth of put options. The conflict has been largely framed as one between data-driven fundamental investing and a more ideas-driven big-picture approach. Analysts who agree with Burry's bet have pointed out the massively inflated price-earnings ratio of Ark holdings. The debate is exemplified by Ark's very large position in Tesla, an automaker whose market cap is larger than the next 5 largest auto companies combined, yet only occasionally turns a profit. Wood, as chronicled in CoinDesk's in-depth profile, was vaulted into the upper tier of investors by her unwavering faith in Tesla during the company's dark stretch in 2018. Even before shorting Ark, Burry had a huge $534 million short position against Tesla, aligning him with the Tesla Q skeptics who believe that Elon Musk's big promises about things like full self-driving are hot air. But this is just the sexy philosophical surface of the debate. Look closer, and the face-off between Wood and Burry is about something both simpler and bigger: their different thinking about inflation. Burry, as befits his doomsaying reputation, is a notorious inflation hawk who in February compared U.S. monetary policy to Weimar Germany. That's a widely shared perspective among Bitcoin advocates. Burry believes inflation spells doom for the kinds of companies Ark holds, including, somewhat ironically, Coinbase. Inflation is a threat to the valuation of growth or innovation stocks, largely because even moderate sustained inflation would lead the Federal Reserve to raise interest rates to rein in the money supply. Because so few of Ark's portfolio companies are profitable, they can be expected to need continued cash through loans or other financing as they grow. Higher base interest rates make the capital more expensive. It would have a similar or even stronger effect on venture capital and private equity hedge funds. Wood, meanwhile, says she now believes current inflation is transitory, correctly pointing out that commodity and used car prices are crashing back to earth. In a tweet thread responding to reports of Burry's short position, she argued, "The equity market is likely to reward disruptive, innovative strategies once again when headline inflation breaks and/or fears of recession increase." This is perhaps a bit surprising from Wood, who had supported the re-election of Donald Trump and so might be expected to join the mostly right-leaning inflation hawks. Her contrary position might show a flexible mind willing to reassess conditions on the ground. On the other hand, it might be a matter of convenience, since predicting low inflation makes her fund's thesis look better. And Wood currently has a motive to talk her own book. After a sustained run of impressive annual returns around 30%, Ark returned a staggering 150% in 2020, thanks to positions in companies like Zoom that saw outsized gains during the pandemic. That success has both grown the balance sheet and attracted more capital, and Ark now manages nearly $22 billion, up from $9 billion in October of last year. But Wood's impressive returns have, at least for the moment, dried up. Ark is down 6% so far this year, while the Dow Jones Big Cap Index is up 20%. Ouch. There is another angle on the inflation question, though, which lurks just under the surface of Wood's thesis. Some argue that a loose money supply has been good for speculative investments as household saving rates increase and more participants put money in the stock and crypto markets, a phenomenon often referred to as asset price inflation, though there's serious debate over whether calling this a form of inflation is accurate. One important implication of the asset inflation theory is that money going into Bitcoin or Tesla stock isn't making demands on real goods. That means rising asset prices could actually be reducing real inflation pressures and the threat of higher interest rates. That would mean capital could stay cheap for innovators, even as money printing pumped up speculative assets. Wood signed off a long rebuttal of Burry with this: "I do not believe that Burry understands the fundamentals that are creating explosive growth and investment opportunities in the innovation space. For ARK, those fundamentals could actually include continued heavy U.S. public spending, as long as Wood and her fellow travelers can coax enough of that cash into their own high-risk bets." Michael Burry's short bet in Ark Invest's Disruptive Innovation ETF has caught the eye of Cathie Wood, who responded in a tweet thread on Tuesday as to why Burry's bet is misguided. A recent 13F filing from Burry's Scion Asset Management revealed a new $31 million put position in Ark Invest's flagship ETF, as well as a growing put position worth $731 million in Tesla, which remains Wood's highest conviction stock. But according to Wood, Burry may not understand the current growth environment as inflationary pressures are likely to be short-term in nature. Most bears seem to believe that inflation will continue to accelerate, shortening investment time horizons and destroying valuations, Wood explained. But Wood thinks supply chain-related issues will be resolved, helping relieve inflationary pressures. Wood pointed to a sharp drop in certain commodity prices in recent weeks, including lumber, copper, and oil, as to why inflation may not linger for as long as some think. Used car prices are also beginning to fall after an extraordinary rise, and a strengthening U.S. dollar has also put pressure on commodity prices, according to Wood. Meanwhile, the bull market in stocks has broadened to other areas and sectors of the market, like value, energy, and basic materials. The bull market has strengthened, setting the stage, we believe, for another leg up in innovation strategies, Wood said. She continued, "In our view, the seeds for the innovation explosion that Ark Invest is dedicated to researching we planted during the 20 years ending with the tech and telecom bust. Having gestated for more than 20 years, these technologies should transform the world during the next 10 years. In a February tweet that's since been deleted, Burry said Wood's promises of disruptive growth and transformative technologies wouldn't be realized. Shades of Gary Pilgrim and PBHG growth from the 1990s, or Gerald Sy and the Manhattan Fund in the 1960s, he tweeted. Well, that's it for today's video, guys. Also, we would like to mention that this is not a channel intended specifically to provide financial advice, and we do not ask you to invest in any company. This is merely a channel directed towards bringing educational content to your doorsteps. With that in mind, before you invest in anything, we recommend you do thorough, wide-spectrum research on the topic. And make sure to subscribe and give us a thumbs up. See you next time on Michael Burry Secrets. Bye.